Today I'm teaching my brother how to actually read the charts like a trader and start to take trades with just $4. If you follow along, you'll learn things about the market that took me years to truly understand. And it's what separates profitable traders from everyone else. We're breaking down advanced chart patterns and how to read the signals in the market and the exact 5-step checklist I use to profit from these signals. We're building a simple, repeatable plan to profitably approach the market every day, even as a beginner. So let's get you and my brother reading the markets like you've been doing it for years. Okay, so week 2, we are trying to start focusing on trade entries. So I'm just gonna quickly show you a trade I took a while ago where, it's basically the same, just to kind of give a quick overview of what we're trying to accomplish again. The first week we were really starting on identifying just these trends. And then I think this week we can start to really focus on how do we tell like when something is gonna actually bottom and that we can look for an actual trade and reverse to the upside. Especially this last week, and we'll get to it, there was a lot of times where we got to, let's say like a support level here or a resistance level up here, and the market just broke those levels. And so how do you tell the difference between that and the market showing signals where it's gonna start to reverse and we can enter a trade and take advantage of that and bet on the reversal. And so the big part about the strategy is finding those reversal spots here using, the idea of identifying the major trend of the unhealthy trend into this support zone. And then like in this trade, identifying there's a head and shoulders pattern and then a potential for the market to give back this kind of unhealthy move. This is a very common like target to go back to this high right here. And so this week, I think it makes sense to try and get you ready to trade and not necessarily be entering in, but focusing on starting to identify them and have the tools in place to figure out, okay, how you can pull the trigger on these trades and starting to paint the full picture of, okay, the 5-step process to, enter in on this trade and then, what it looks like so we can start to kind of visualize that more.
Perfect.
What else? Yeah, and I think last week we did a good big picture of talking about identifying trends and the big picture. I think it makes more sense now we can start to look at, head and shoulders patterns and other patterns that are used to enter in on.
Yeah, I had a couple of spots where it's like, seems like there could be something here, but I don't really know what I'm actually looking for in terms of an entry.
Yeah, and like when it
pattern or signal.
How do you know when it's going to continue going in one direction versus actually setting up a trade to reverse? So how normal of a week was last week? It definitely was not super normal. Like even if you just look at like a daily chart, we zoom all the way in, let's see, we're technically on Monday. So if we discount this candlestick, like the wicks were pretty big. I guess these are the 5 candles the last week. And it was definitely like pretty all over the place. But you can also say like right now, that is kind of almost the norm. Like in the last few months, there's been times where it's like, okay, a week you barely move anything.
Yeah.
If these are, each of these are a daily chart. And then like you have like, here's a week where it's like, okay, the market kind of went crazy. So it's definitely been like very volatile. And that's where like, I don't know, market type comes into, or like just what the mode the market is. Because if you look at these last 4 months, but then you go and look at the 4 months before them, like the amount of movement that was happening was very small,
just much smaller candlesticks.
And then there's some moves and then some down. So like we're definitely in a like much more volatile time.
Okay. Yeah, one of my questions farther down was like, how do you determine if a candlestick is like big or significant in terms of sizing? And like, is there like a number of little, what are they called on the side, points?
Ticks or points?
Ticks. Yeah, ticks or points that like it needs to hit for it to be like, oh, that's a significant move. Like that's, I don't know, indicating that the market's moving heavily in one direction, I should enter in a trade? Or is that kind of all just relative to what the market's been doing? And so for instance, like, just like you were saying here, everything's been going up and down like crazy.
Yeah.
So that's kind of just normal day or normal week.
I think it's like even day to day it can change. You judge of like
this is all kind of relative.
Yeah, like you have candles like this where it's like they're kind of this size, and then all of a sudden like they're this size, and then all of a sudden they're this size. And so I think it's like just kind of using, okay, what has the market done in the past recently, and where are you, like, what are the current candles being printed in relation to that? So like this candlestick is huge
Yeah,
compared to these ones.
those ones,
So
yeah.
that, just knowing that, okay, something has changed, and this is like something that you should pay attention to, and know that like a lot of time that can change what's going on in the market. And then also even like a big candlestick like this in a choppy situation like this, it can be a lot more likely that it just reverses like it did right here.
I think we briefly touched about it, but like even something like that, even though it seems like, oh, it's so unhealthy, it has to snap back. Like if there's not really an entry spot or something obvious, it's just not worth trying to take it because you're just essentially FOMOing in.
Yeah, I mean those like V bottoms like that are just really hard to, they're just not tradable.
Yeah, it's more like gambling than.
Yeah, I mean sometimes like I mean even like on this day last week, I think this was Wednesday or something, but where the market just like opened up here and just sold off for hours,
Yeah,
trying to like catch a bottom when the market's so strong in one direction just doesn't really work, because it's just so unlikely to reverse after it starts to really move in one direction with that like momentum.
yeah, yeah. There's just so much pressure. Okay. Yeah, I think it was on the day before this, on the 27th, there was a lot of upward pressure. And one of the things like you traded for a bit and then in Discord we're just like, gonna be really hard to take a trade today. It's just yeah, just really hard, gonna be really hard to take a trade today. And it seemed like it was hitting some, I guess, resistance levels throughout the day. But maybe it's just like was there just kind of like too much upward pressure that even if it hits resistance levels, it's just so likely to continue going up.
Was this is the 27th? Okay, yeah.
Yes, yeah,
Uh,
127.
I'm just trying to situate myself on the chart. Yeah, I mean, I think looking at it, trying to just find the price of what it looked like before the market opened. I think the idea was that with this was that we just taking into account like the super big picture of having this big sell off and bottom the week before, and then it kind of did this consolidation pattern like bull flag, or pull back where the market just kind of chopped for a few days, and then it breaking out of that
Yeah,
and
it was
then
just
pulling
heading
back and
up.
continuing higher. It just seemed like there was a really strong trend in place, so it was more likely to just continue higher.
Okay.
And even though like there's these highs back here, you can definitely make a good resistance zone off of this.
Yeah, that's one of the ones I drew.
Even if you pull it down to like where these two highs touch to, like
Yeah.
it's very far away from the open price. And so it just seemed like it would be more likely that the market would just, trend higher over the day. And so like going on to a 1 minute chart, I think this is that level. Like when it broke that.
Yeah. And that's kind of where I was looking. I was like, oh, is this a spot where it could reverse now? Because you've hit your resistance level and it looks like it's doing almost like a little double bounce or testing if it's wants to fail. But also it has, maybe it's just like a question of like it has so much momentum behind it heading upwards that it's probably just going to continue upwards through an old resistance level.
I mean, same thing though, like both of them on this day, the NASDAQ pretty much opened at the resistance level and then sold off and came up. And so, I mean, both of them kind of hitting that move up in the morning. Like this was a nice move into that level, like to where it could reverse.
Yeah.
But one thing was when the market it opened here, and when it kind of does that spike lower first, and then it's almost like, think about it like the market's already faked in one direction this morning. And so
It's probably not going to do it again.
yeah, I mean, a lot of like you have multiple ways the market can play out in the day, and I feel like a lot of the times one option is it fakes in one direction and then trends in the opposite way it faked, or it could just start faking in every direction and you have more of a range bound day and choppy day. But a lot of the times, especially if you take into account the big picture of thinking that overall there's going to be upwards pressure, it's more likely that this fake lower is going to turn into just trading higher. So even though it comes up to
Yeah.
here and had this like big bearish bar, you can start to think, okay, well, that could turn into a spot where I could look for a reversal, because this could be considered a pretty rapid, unhealthy trend move, because there's just bullish candlesticks here.
Yeah.
But I think the big thing is, okay, well, if trying to think of like where the market's going to move is where like the gaps between like support and resistance and so like where is this going to pull back to? And you can't just think about the low here. You have to think about, okay, well, there's kind of this here too.
Yeah.
And so it could come back to here. It could be breaking out and pulling back to these previous highs from like
Yeah.
the overnight high. So there's all this price movement in here, which makes it so there's not as much of, when you think about like the fair value gap idea of like if there's just nothing to hold the market, it'll just fill that quickly. Like I'm trying to find a good example here. Even like this is a good example of like, okay, the market shoots up here and there's so much room between here and, this previous swing here for it to like move down. And so the potential for a swing to go a long ways is higher because there's not as much support or in the way. And like you could draw this here, but really it's like so close that it's probably
Yeah,
just a
it's
failed
almost the
breakout of
same
that.
level. Yeah.
Yeah, so it's like the next level down. That's why I won't take, even though this looks good, sometimes I'll think, okay, well, if I enter in here, how much space do I have before it runs into some resistance? And in the
Okay.
sense of like, if you're getting in a trade and your risk reward is like this, it's like, okay, well, it doesn't go very far in my favor before it, has a chance to reverse. And so that's a big thing to think about. I think when understanding like a almost like a little bit advanced of like understanding when it's worth risking taking a trade is those gaps. But I also think that just comes with reading the trends as well of like, and in a way like a healthy or unhealthy move potential.
Yeah.
And I think like here, like the patterns I would be looking too short here, because just because this is here doesn't mean it's like not a good spot to bet a trade. I think here, like this can actually be a good signal too of like, oh, this thing moved up. Clearly it was losing steam right here because it got super choppy.
Yeah.
And then all of a sudden it just, broke lower in a big way. And so so with that, my first thought is like, okay, well, is this just a pullback to continue higher, because it's the pullback like that is healthy in the sense of further uptrend. And so I would want to see, okay, what is this? What is like these next 3 candlesticks look like? Does it, start to come up and like retest this area where it failed and then start to turn down? That's where you would start to want to think about, okay, well then maybe I'll get in short once it like breaks this low again.
It goes through that. Yeah.
Because the way I see that is like it's really it's showing you that this is like I don't like to read into every individual candlestick, but I think in these key areas it really helps to.
Yeah.
And so that's where like I would be reading into candlesticks and looking at like, okay, how is the price reacting to, and is it going to make a new high? And if it breaks and makes a new high, I think it's probably just going to keep continuing higher because that's a really strong signal.
Yeah. Strong rejection of that.
Yeah, of this like failure to or trap to go lower or attempt to go lower. And then this becomes an attempt to go higher and it succeeds by making a new high versus attempting to go higher and then failing. And so, even for like almost like for this big candlestick, it's almost like whichever way it breaks out is a big signal.
Okay.
If it broke that way or broke out this way. But like this isn't, I don't consider this candlestick, breaking out of this. Like I think that's almost just like, okay, it's moving down really fast. The candlestick closes and a couple seconds continue and then it reverses. You just see it as one move.
Yeah. Yeah. That was something I was thinking about for either like 5 or 15-minute candlesticks, is that some extent how they're drawn very much depends on which minutes of market activity they encompass. And if you move them 30 seconds or 1 minute, the other, like either direction, it can change the shape dramatically.
Yeah, that's why I think, yes, I mean, that's a really good observation is, yeah, like the candlestick forms very differently if you just change the time by a couple seconds. And so some people will do this and I don't think this is good. Some people will just go to like, oh, if they don't like how the 1 minute chart looks or confirms, they'll go to, a 2 minute chart or like, they'll go to like a 30-second chart. And it's like, it changes how the candlesticks look. But again, like, in a lot of ways, you're just almost like trying to find something that looks good to you.
You're trying to find something that says yes.
Yeah, you're like basically looking for a confirmation. And with how the market is, You can always find that if you set the right indicator or thing on your screen. You could just draw something that tells you, to go short. You could just make some random pattern up.
Riley, I've got a new indicator for you. Whenever there's a white candlestick, you enter. How do you look at it when if you scroll a little bit to the right, when it's comes back and retouches, so at the, I don't know, what is it, 10:30-ish time frame? Right in
Like
there.
this
Like
area.
it, yeah, when it retouches that, are you thinking about like, oh, is this a, I don't know, that's not really head and shoulders forming, but like, is that another spot where it's testing downward pressure to see if this whole thing is a failed breakout? Or like, I guess the question is like, what constitutes a failed breakout and what does its like time frame look like of like,
Yeah. I generally think they have to happen pretty quickly.
okay,
Just because I think the idea with them is, the movement's happening quickly, and then, some like double top like this happens, and then it fails like that. Because the idea is it's a lot of people getting in rapidly, getting super excited, and then there's no actual strength behind the market to hold this price up. And so the longer the market sits up here, the more strength there is in confirmation that there's people that are
people are good
willing
with it.
to, yeah, they're accepting the price. Either they're holding in, they bought down here and they think it's going to continue higher, so they're holding, or there's people jumping in here thinking it's still good. Either way, like it's not, it should happen pretty quickly. And again, that's not super clear on like, oh, wait this many candlesticks or wait this many candlesticks and
Yeah,
after this many
definitive, yeah.
candlesticks. Because like here, it's like, this is still like, I don't know, what, 5, 10 candlesticks. And I would still say, yeah, this could totally happen of come up here and fail. But I think it
Yeah.
should be, okay, if, this was a strong for this, particular spot, like this is a big candlestick. And in my eyes, if this candlestick, if it doesn't come up here and fail and that's what happens, that's where it should have, in my eyes, that's where it should have happened. And so if it makes a new high and then starts to chop and even starts to pull back, I think at
Hmm.
that point,
Okay.
the failure potential has gone, and instead it's transforming into it would be a different kind of trade. Like even if it came up here and eventually slowly reverse and trend down, it would be more likely that it's a slow sell off, and those aren't really like something I want to play with,
Yeah, they're not
just
what you're
because
doing.
they're
Yeah.
a lot harder to actually trade and manage. And in that sense of like, you could also paint the picture of, well, this is just like a bullish consolidation after that move,
Mm,
so it's harder
yeah.
to predict that,
Like if
I
you look at
think.
that on a 5 minute, it probably just looks exactly like that.
Yeah, and I think that you're at this point, usually these play out with the major trend, and I would say the major trend is to the upside. And so you're betting on, I think at that point you're betting against the major trend, which isn't a good idea.
Yeah. I think a major thing for me to try and focus on next week is thinking about time frame of everything and like making sure I'm zooming out or using a good frame of reference. Because like as you say here, like if you paint the giant flag there, yeah, it's just like, oh, this is just a consolidation. But remembering to do that rather than getting focused on, oh, in this tiny window of time, in this what hour and a half that we have here on screen,
Yeah,
things can look one way, but as soon as you zoom out a little bit, you're like, oh, actually,
yeah, it's more
that's
likely
just
that
a
it's
consolidation. Yeah.
in a huge uptrend.
Yeah. Yeah. Keeping the bigger picture in mind is something for me to work on or focus on.
Yeah, and like we talked about this last week of, I think that's the biggest thing that'll be the key to your success, because you can have all these little, like a great move up, these little micro patterns that look good, but the micro patterns I think are so inaccurate by themselves that they're never worth, they have to be like the last thing that you think that you're
Yeah.
using.
Yeah. They have to
Um,
be taken in context of
yeah,
the larger market and larger trends.
yeah, you can't just go to a random spot on the chart and, enter in based on that pattern and then win money.
Yeah. How does like weekend trading or after hours trading work? And then like how much of a reset is the weekend in terms of like market behavior? Or is it kind of just not really much of a reset because things kind of are just always trading?
I would say sometimes it's a reset, but not every time for sure. Because like if you look at, if I pull up more of a 15-minute chart, if we look at, like trying to, let's see, Sunday. The last couple weekends are 31 and 24. So like this was a weekend, this was a weekend. You know, I mean, I think it's generally it doesn't necessarily reset it, but I do like to come into Monday and see how things are going and seeing a potential for movement difference. But also I think a lot of times, like you're saying, because trading happens not 24/7, but pretty dang close.
Yeah.
And even when the market closes for the weekend, it does close from, you know, Friday at 4 Eastern time or 5 at Eastern time, and then opens up at 6 p.m. Sunday. And so it is closed for like 2 days. But, you know, here, unless something huge happens over the weekend, like this just looks like normal. Like it didn't
Yeah.
look like anything happened here. And
Yeah.
then before the market even opens, I mean, the market then opens up here on Monday. There was a lot that happened between now and then, and I think it allows you to just look at that data and kind of see what's going on. But of course, like that doesn't mean Monday could open up and a lot of things could change.
Yeah.
So I think Monday is definitely more of a day than the others to be aware of
Just potential
potential.
for trend changes or swing changes.
Yeah, but even like today, it was, you know, it seemed pretty obvious that once the market kind of opened up and started ripping higher, that we were just going to continue higher for a while.
Yeah.
Just because, you know, taking into account that big picture of, well, we had this huge V bottom from Friday and then, you know, Sunday night until Monday morning and then opening up and having that rip higher
Heading higher and then
just because, you know, yeah, it was pretty overextended.
yeah. Because what? Professional traders aren't trading on the weekend. They're only trading during
Yeah, I mean, like big banks and
market
stuff. Yeah,
hours.
they're pretty much only trading during main market hours.
Okay. Okay. So I'm reading into it or coming up with an explanation that works, or for myself would be like, okay, yeah, non-professional traders or casual traders traded over the weekend, had a V bottom, and then Monday came in and professional traders are like, yep, we're ready to continue higher, and then just ripped it higher,
Yeah, I
which
mean,
could just be a story that fits the trend in an absolute, but
yeah, and it's also like just because, well, the US markets are closed, but like the other, like
yeah,
I
that's
definitely
true.
wouldn't
Yeah.
discount this data of like being like, oh, just because like main US banks aren't trading US shares and stocks doesn't mean like that this isn't a reasonable move that like
Yeah.
has meaning behind it. Because quite often it's like it's matching major moves happening in other markets that are open, like Asia or Australia or Europe. So I just view it as continuous data. Like you know, when
Okay.
I'm drawing my
Yeah.
levels, I look at, okay, here's the most recent swing low, and here is a, you know, a swing high that it had before it had this sell off. So like if we're coming up here, like that was my initial target of like, okay, well this is going to be an interesting spot to look for if it reverses. And also, you know, that's where the market closed on Friday, and we had this kind of gap down. And then after that, you know, there's not really a good these little swings. Like as the market's making these little swings down, I don't really like to just be like, okay, well I'm gonna, you know, make a level here, make a level here. You know, you can't keep track of all these. Again, like the whole idea with looking at levels and zones is trying to identify the more significant ones. And
Yeah.
the reason why this one is significant over these other four is because this is where this sell-off basically started. And so
Okay.
that's where I would assume that, you know, the whole idea of, okay, when a market has a big sell-off, it's going to fill that and give that back up, and it could then sell off again. And then
Essentially come back to
also,
equilibrium.
yeah, and then this is also where the market closed on Friday, and then gapped down. And so that's kind of like just another significant area to look at.
Okay. Yeah, I had a question on how you drew that level as well as the one at the bottom. Is the one at the bottom just because that's your most recent significant low?
Yeah. Yeah, I mean it's, you know, it's like we bottomed here and then bottomed here and then, but yeah, the main thing is like, okay, well, if we get down there, I want to see how the market reacts to the most significant recent low. You know, like I guess you could zoom out and you know, you have to go pretty far back to find a new one, and there is ones further down. But the most recent ones are more likely to have reactions than, you know, ones where you have to zoom like, you know, weeks out to find them, you know, where it's like, okay, this
Yeah.
one's 10 days old.
Yeah, I was trying to figure out, or I guess had a question as well as like, how do you view the strength of like floors or resistance zones that are, I don't know, 2 days old, a week old, a month old? My guess is it just gets weaker the farther back they go. but like, do they just become irrelevant or something is still kind of there? I guess maybe also question is kind of like, what's a speed bump versus a zone?
I would say, yeah, it's like you initially said, as they are farther and farther away, the levels in terms of like, okay, 10 days old, 30 days old, 2 months old, if you kept zooming back.
Yeah,
Um, I don't consider those to be levels after a while.
yeah. Like that
Uh,
top one you have there. That's I think the one I was one of the ones I was kind of primarily thinking about.
Yeah, no. So one first idea is I want to see how it's gonna hit that level because it's been so long that it's for a far back level that you it's drawn. It's been so long since the market's even been at that price. A lot could have
Yeah.
changed, and so I'm not gonna initially think that it's gonna respect it because
Mm,
I don't know any recent market action around that level.
yeah. It's like the underlying variables are constantly changing. And so what happened? What is that, 2 weeks ago or a month ago?
15
Yeah.
days from here to here, yeah. Yeah, I mean, well, and also the other argument is, well, okay, we came up and tested this level, sold off, and then the markets, regained strength, and now it's, coming to test it again with probably more strength, and so it makes it more likely to break through it.
Essentially a giant V.
Yeah, like this is just a big, if we, zoom out even more to even just a daily, it's like this level, it's just a swing in the market of like it just come here and pulled back and now it's pushing through.
Yeah.
So it's like
Do you view that as like, okay, maybe something happens here, or like it is a point to pay attention to, but unlikely to
yeah.
influence the market?
Yeah, I mean, I would say, yeah, like with a big far level like that, it's like you have your levels like that are really, really solid, where it's like, like this, when this level was originally made and, you had it like this and the market was more looking like this, it's like
Yeah.
these were times where the level was really strong and you're more likely to
Yeah.
think that the markets are going to respect it and more aggressively trade at it
Yeah.
versus, when it's coming here, you think, okay, the level's probably weaker, but it's definitely a point of interest. And so how I would approach that is, okay, well, if, let's say if you go down to a 1 minute chart and the levels all the way like up here or something, and the market makes some crazy move, and you say, well, okay, today the market trend into this level is really overextended and there's a ton of signals showing me that I think that we're going to double top and we're going to sell off and give this short-term move back up that we've done,
Yeah.
then it's worth, I would still take the trade because there's still that area where it has the potential, and then all these other, smaller trend signals are giving you a big picture reason to bet that the market's going to go down there.
Okay. Talking about resistance zones, could you zoom back to that screen you just had up or time frame? So looking at the like, I don't know, 22nd to 25th, how there's kind of a resistance zone through those top little ones.
Yeah, like here.
Yeah, it's right through there. How do you, because I think that's one I drew at some point. How do you, or off the bottom of that maybe, but how do you think of a zone when it's like, it kind of seems like there's something there, but you also have candlesticks or little sections that go through it?
Like
Does
here.
that kind of, yeah, like, does that discount that kind of resistance zone, or is it there's something still a little bit there and it's,
I think
again,
it
a
can. Yeah,
small indicator to pay attention to, but not a strong, it's like it's a little bit of a zone, but it's not a strong zone.
yeah. I mean, like I would say this is like it basically did a failed breakout. Whatever this like this is. I'm looking at the time at the bottom. Like
Yeah,
it's the market's open right here, and so it did some kind of punch higher and then failed back in. Um, but it definitely like I think makes it so this resistance level is a little more tricky. Like more than likely, I wouldn't be looking for like it to come up here again. I would think, okay, well, maybe I start tracking this high now. Because a lot of times when levels
yeah,
start to get broken like this, it's like, okay, something's going to start changing and it's either going to, sometimes it'll break out this way and then fail and then push out the other end. Or it could
yeah,
be like it's breaking and then comes back and then breaks it again. And actually, like that's where it finds the actual strength to continue higher without failing back in.
yeah. Looking at the bottom one for those, yeah, that one there. Yeah, I did something where I kind of pulled that pretty far across for looking for when this whole thing kind of comes back down. Yeah, through there.
Yeah.
And it seemed like it kind of worked, but it was also felt
Like
like
it
something
bounced
where I was
here.
just, yeah, it seemed like it kind of worked, but also something where I was kind of just like hunting for something. Is that like,
No, I mean,
is
I
that
think that
strong enough or?
no, I think it's a good, like, my assumption with this move up, and then if it when it started to really like rip like
Yeah, lose its 2%.
this move, like if the idea of it's gonna give this whole move back up, I would think that it would somehow come to this zone and find support. It doesn't have to
Okay.
necessarily be this support level, but
Yeah,
I would
maybe it's a
think,
view it as a bigger zone.
yeah,
Okay.
like this is where the market was chopping and gaining strength, and then it just took off, and then it failed, and so like that's where I kind of just with the idea of okay, it's gonna give the whole swing back up. If it
Yeah.
fails, that's how I would read that. So that did kind of essentially align up with that perfectly.
Yeah.
So I mean I think that that's a good level and target to be looking for that. I mean like during
Good
it, I'd
good
be
thought.
yeah, I mean like I'd probably just be thinking like okay, it's gonna come down here somewhere.
Yeah.
And then,
Okay.
you go into a smaller time frame and look at when it actually bottoms.
Yeah. But even yeah, I guess and then leads into the next question of like when it rips down like that, how do you even I mean maybe it's something where it's like, yeah, no, you just don't really think about taking a trade in there because it's moving has so much momentum and it is moving so much in one direction. Like, okay, it's in a little bit of a zone. It's making a little bit of a, I don't know, tiny bounce or mini pullback or whatever.
Mm-hmm.
Like, are you looking of like, oh, hey, maybe there's something here? Or is it just there's so much momentum and so much downward pressure? Yeah, I guess it's somewhat of like the how do you determine the balance between what is unhealthy overextension and what is just a lot of downward pressure? Because it like in the 15-minute chart, it's just like two or three candlesticks that rip down through this. But like
Yeah.
on the 1 minute chart, you see a lot of those like little tiny pullbacks or like mini consolidations. Yeah, yeah. So they're like, yeah, like that.
Yeah, like this is a 5 minute, and then yeah, here's the 1 minute.
Yeah.
Um, yeah, because this kind of move is like this is something that doesn't happen very often.
Yeah, so maybe it's
Um,
irrelevant, not irrelevant to talk about, but
Well, it's just like it's like so, sometimes you're like, oh well, yeah, and this is a great example of the dream of what you could do if like if you did somehow, like you're saying, here was it bottomed like almost exactly at that area, and oh, if you went long, it's like you would have caught like somehow, you would have caught like a huge move back up, and I find it really hard to actually do that. Because like trying to determine okay, yeah, like this is what's healthy versus unhealthy, and even in this trend there are pullbacks, and like all these trends are, it's every trend is going to eventually reverse in
yeah,
some way.
that can't continue forever.
um
But
but in terms of like trying to figure out like okay, if we have a huge move like this, that means well eventually it's going to have a huge reversal, like even looking at a 15-minute chart here, it's
yeah,
like it did pretty much give back, until like the market closed, like it gave back like 80% of the move before it eventually continued to sell off further. Hindsight, this is definitely was an unhealthy move, and it did reverse like middle of the actual trading day. But I guess in terms of trading it, like, well, first off, like looking at like more my timings of like thinking about reversing,
yeah,
like the early moves, like when it moves so much in the first 30 minutes like this, because here's like the first 30 minutes, first
yep. There's your 10
45,
a.m.
where it's like, okay, this is how much it's moved in the first 10 minutes, which is a huge amount. It's kind of hard to look, I guess that helps comparatively to normal market
Yeah,
movement. The zoomed in is kind of hard to tell because there's nothing to tell against. But I always find like the momentum's just way more likely to continue lower. And like, something like this where you think, okay, well, here's the final attempt to go lower. And then we got some bullish candlesticks here where it's like could continue higher. And then, you think,
yeah.
okay, well, what if it gives back this whole move?
Is it setting up some sort of head and shoulders?
Yeah, like it's it's easy to start to look at those micro patterns again and get too laser focused on them when again like
Yeah,
okay, well the big downtrend is telling you that there's a ton of momentum lower, and a ton of momentum like can just kind of defy like the norms. 99% of your trading time is like spent in more normal market conditions. Like, yes, they go back and forth from like, having like decent moves in a day and like choppiness and then like a spike and lower and trending days. But like very infrequently do you have times where the market just all of a sudden just some news is behind it and there's just some craziness. And so I almost try and stay away from those days because
It's not behaving in a normal pattern.
yeah, and like what you're trying to do over time is have your strategy that you do every day, and if the market doesn't fit that, you move on. And a lot of times, like the market doesn't. This isn't the market fitting that, because it's not making a like an unhealthy move down that you think is going to reverse. It's making an extreme momentum move down that could be an unhealthy move. But in my experience, most of them will move down and then they can still have some big moves up, but a lot of time they'll just go into like a sideways chop or like a slow bleed lower or maybe even like a slow grind higher with
Hmm.
some pullbacks that are just like really hard to trade in. And so I think trying to determine like what's an unhealthy versus like a really big momentum move just comes with kind of
Time.
experience of seeing the market. Like this morning, even, like this seemed like it could be an unhealthy move
Yeah.
because the market just opened up here, ripped up in the first 30 minutes, and then had some chop here, had one more push higher, and then started to kind of sell off here, and then it actually had this candlestick where the market went up and sold off in this one candlestick here. And so my thought was like, oh,
Mm.
well, that looks like it could be
Here's
basically
a
a
maybe.
top
Yeah.
and it could start to sell off and give this move back up because that really aligns with my strategy of seeing a move hit a zone happens in the first 30 minutes. But if it just ripped up an even bigger amount or just here it's that signal didn't fully develop, it just start continued higher, it's like, okay, well then there's just more momentum behind it and I'm just going to move on with my day.
Yeah. Yeah. I think I watched it to about, what would it be, 11 or so.
Yeah, because then I mean, like even here, it's like big move up, and then it just, and this is why a lot of time I've stayed away from being like, okay, well, and I've tried it in the past, like, okay, well, if I don't think it's going to reverse, well, why don't I bet it's going to go higher? And it's like that. The hard part is a lot of times it's like, well, a lot of the big move has already happened, and so you're betting on a continuation of this trend becoming an even bigger trend.
Yeah.
And like
Or
today
it
is the
seems like
perfect
it's,
example where it just went up and just kind of sat there.
yeah. Or it seems like it's just gonna make a little flag. Like we
Hmm.
shot up and now let's consolidate over a small period of space.
Yeah, so I mean that's just like such a hard part about trading is seeing all these different things in the market and thinking, okay, how can I profit from this and how can I profit from that? And in
Yeah.
reality, that's trying to fit what the market's doing versus waiting for the market to fit what you want and just
Yeah.
taking advantage of that, even if it doesn't happen very often. Now, if you still don't have a trading platform to actually do this, we're using NinjaTrader. It's probably the best futures trading platform out there. You can start with as little as $4, which is a lot less than other platforms. And so you can get it in the link in the description or this QR code. I highly recommend it. I've been using it for over 5 years at this point.
One of the questions I had from this morning was around how the ES and NQ interact with each other. And so I think the way it worked this morning is so that resistance level or zone that you had drawn there, the ES hit it first. And so it was like, okay, if the essentially like, okay, the ES hit this first, the ES might reverse here. Would you expect to take a trade on NQ if NQ is following ES? And then similarly, when NQ hit that zone, would you expect, if ES has just continued shooting upwards, would you expect NQ to reverse or just kind of keep following ES up through the zone? Does that make sense?
I think I need you to
No?
say that again.
Okay. Uh, Essentially, it's just like understanding more about how ES and NQ interact and follow each other. And so if one hits a support zone or a resistance zone and the other's not at that zone yet, do you expect the other to potentially reverse if the first one reverses? So for instance, if ES hits the zone and reverses, do you expect NQ to reverse wherever it is, even if it's not at a resistance zone?
Okay, so yeah, I think I understand your question. Like, how did ES and NASDAQ correlate? And when one's hitting a zone and one's not, will the other one like catch up first, or will it just kind of reverse where it is?
Yeah, or in some ways it's like if one reverses, do you expect a reversal in the other?
Okay, yeah. So I mean, I think a lot of it's how this kind of goes back to I think my rule of like I need them to both be trending the same way and acting the same way, very similarly at least. Like,
Yeah.
you know, this morning it's like let me try and just get these charts to like almost match perfectly. Is okay, so this is pretty much the same point in time, even though the chart there's more space here. You know, the NASDAQ had these big spikes and flags this morning where the
Yeah.
ES was almost more just kind of like continuous chug higher. You know, maybe you could say there's a low flag here, low flag here, and then it had that spike.
Yeah.
Um, but you know, that's without reading too much into the candlesticks, like just at a glance, okay, the trends are basically the same. Like we're just
Yeah.
opening and moving up. And so I view those as okay, they're both correlated. They're both going to be pretty much doing the same thing. You know, one might make like a little bit of a divergence here was okay, the ES made a high here and it sailed off like this far, where the NASDAQ made a high here and sold off like just not as far.
Yeah.
And so, you know, it's like there was a little bit of divergence there. And the thought was like, okay, well, if I take a short, will the ES sell off faster and harder than the NASDAQ? But both of them, I think, would sell off. Even if, like you're saying, the NASDAQ is at like a resistance zone and there's this downtrend that I had drawn this morning from like kind of the big picture of these like swings. Okay, we're coming up to this area. You know, if we hit this, how does it kind of like sell off when it, if it is going to? Even if the
Mhm.
ES wasn't at that level, like I would still think that, okay, the ES, it would sell off too. I
Okay.
would say that it makes it kind of less likely for it to happen though. I would say the better setups and trades happen when both of them are at a clear reversal zone.
Okay. At the same time, essentially.
Yeah, because it's
Yeah, because
you know.
that was part of my question this morning is that it seemed like the ES hit the resistance zone while NQ was still like in between resistance zones or hadn't got to that same point in time. And then it did later on, and I think at that point ES had continued through it.
Yeah, I mean, I think it's just another one of those things of like trying to have things line up really well, you know, and that's when
Hmm.
you know, you bet on the outcome. Just because it's just another variable where, you know, the quite opposite thing that I see often is like, okay, the ES just opens and sits there while the NASDAQ opens and spikes in a direction. And so, you know, I used to think, oh, well, if the ES isn't moving, maybe that shows weakness in the market and the NASDAQ will just give this move back up.
Yeah.
And that doesn't like, it's a lot harder to predict what's going to happen when they're not moving together.
Thinking about timings in the market, and you focused me around the most of the time, specifically around the 10 a.m. one. How, like, if it doesn't reverse at 10 a.m. and kind of just continues through that, or doesn't have a major change like around that, do you expect that when it comes to the 11 a.m. point, that it's also going to kind of just continue through and follow what it's been doing, or is that another spot where it will,
No,
there's potential for reversal?
I think the 11 a.m. is the other spot where you would say, okay, even if it's been trending up since the whole market opened, if it, you know, comes up to a resistance level and the, you know, uptrend gets broken and you see something like a double top or something, and
Hmm.
you think that the trend has the potential to reverse, I think 11 o'clock is another window where you can look for reversals. I don't think a lot of time at that point, it's not as much of an unhealthy move that gets reversed and it's not necessarily going to move like very quickly versus like in the morning the spikes up can be a lot reversed a lot quicker if it's like at, you know, the
Okay.
9:45 time or the 10 o'clock time. So like these moves will be a lot more like slow grind lower, but you can still
Get them. Okay, so
capture a big move.
it's like the 7 a.m. was often going to be more focused around an unhealthy move, while or 7
Yeah, the
a.m.
10 a.m.
10
Yeah.
a.m. is going to be focused around being an unhealthy move, while the 11 a.m. is going to be more focused around not structural, but just like a more of a shift in the market than something being specifically unhealthy.
This move right here, I think you mentioned this earlier, like pretty much bottomed at 11
Yeah.
that
Yeah.
day. And so it's like pretty much everything lined up there for it was at that reversal zone. And then this big move, bottomed around that time.
Yeah. So how do you think about it when it gets into like, because I saw this and I was like, okay, it's done its two little bottoms. It's then shot up for a little bit, but then
Here.
it kind of just, yeah. Well, then even before that, like that initial part, and then it gets into that chop, and
Hmm.
that was when I was like, okay, I could like it's just gone into chop in consolidation, and so now it seems like it could just continue down or continue up, and then it obviously continued up.
Yeah, I mean, I think it's basically like you're saying, like an inflection point. Like I think it's a big decision spot of like, okay, is it going to continue lower and just be like a downtrend the whole day? Because if you're looking at like, just this trend, it's like it's basically
Yeah.
coming up and testing this previous swing low.
Yeah, yeah,
And so it's like, okay, in terms of a stair step pattern, it had this big aggressive trend, and that clearly is changing after this move up. But that doesn't mean like it couldn't continue lower, right? It
yeah,
could just be shifting from, okay, a huge spike of a trend to like more of a channel style trend.
yeah,
Um, that's more of a
mm,
broad trend.
yeah,
And so like but that's where like having that big resistance or support zone comes into play of, okay, well, that maybe makes the odds of it breaking through this a little bit better, because you think, okay, well, the overall trend could shift because of that major support zone. And then you could see this as a short term like bull flag as well.
yeah,
So it's one of those spots where it's tricky to know exactly, because a lot of this could go either direction. There's reasons to support either, especially because this, trend was so aggressive and had such momentum.
Do you ever trade off of those bull flags as a like indicator to get in once you see that it starts continuing higher? Or at that point, is it just like okay, it's continuing higher, I can tell that, but it's just lost, or it's like potentially moved significantly through whatever amount of move it's going to make, and then there's just not necessarily enough room for the trade.
Yeah, I mean, for my trades, I like to be trying to target getting in down here.
Yeah,
And once it comes up here, the thought is like, okay, well, a lot of the move has
value.
already happened.
Yeah,
Like the
yeah,
easy money has happened.
yeah,
And so it can get to a spot where it's like, oh, okay, well, why is it doing this? That, reduces kind of the confidence in the potential of the trade.
got it. Yeah, you're limiting your upside. Okay. Have we talked about setting levels at all when things get super high? I guess maybe we talked about like really briefly on the phone of how do you trade when market seems to be hitting all-time highs
Yeah, like even, let me bring up a 15-minute
or
chart.
monthly highs.
Yeah, or it's just like, I mean, even sometimes, like a lot of times, it's like, oh, it's just making new all-time highs. Like this, where the trend is just kind of like up, and there's no, like every day it's just kind of doing like this, it's continuing higher and higher, and there's nothing to
Yeah,
look back to the left side.
yeah, yeah,
I mean, pretty much you're just sometimes I'll come in and I'll look at, okay, well, if the market, opens up here, I'll think about like, okay, well, there's this little mini zone from overnight, and I'll see, okay, well, what if the market comes up here, and I look for a bounce off of this zone, or it can open up like this where it's kind of like in this chop range. This isn't a great example, but it could be like doing like this. And
mm-hmm.
then if the range here is big enough, I'll almost look to like trade between this.
Trade in between it. Okay.
Otherwise,
Just kind of enjoy the show.
yeah, I mean, otherwise, like it's just like you just gotta wait it out. It doesn't happen forever.
Yeah,
Eventually, it's gonna start doing this, and you can say, okay, now here's a zone, and like here's a zone, and then trade in that, and then it shifts to this, and then it's just a part of always adjusting to what's the market doing.
yeah. And being patient. That seems like a key
Yeah, I mean, it's like not
or
every
the
market
key.
condition is gonna work. No strategy can fit every market condition.
Yeah. And so don't force it.
Yeah, yeah, you just want to biggest thing is you want to just try and be waiting for the market to come to you, not going to the market.
Yeah. Shifting to talking about trend lines a little bit more. How often are you like redrawing them or adjusting them? Seems like it'd be super easy to do kind of fairly consistently. So for instance, like I don't know, in that large downwards trend there,
Like
like it'd
this
be easy
one.
to draw, yeah. Like it'd be easy to draw one from, oh, I can't see the bottom. what is that, 10 right there to one of those highs a little bit lower, and then or draw it like before you know the whole thing, putting it at the top of that. Like it seems like it'd be really easy to constantly kind of draw them,
And then like
hitting
just be
different ones.
adjusting.
Yeah, yeah. And so kind of like what's like the difference between like adjusting versus a breakthrough versus just kind of a really poorly drawn trend line. Like, because you could have that one there. I think I did this. Like, I drew one there and did that one to then to that, and then
This.
yeah, like, and you just kind of end up with them
Yeah, you could have them just all over the chart. I mean,
everywhere.
you know, of course, it always just ends up being kind of subjective because it's a subjective thing at the end of the day.
Yeah,
I try and do it only, like, have them only if it's like, it's super clear that that is a trend line. Like,
yeah,
I think this one is pretty dang clear because you have, you know, here, 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 and then it breaks. But that doesn't mean like there'll be times where, you know, the market, there is this trend line and then it starts to go into something like this and you don't, you know, adjust and this still fits or something.
yeah.
Like it
Or
could just
fits
be,
reasonably well. Yeah,
yeah. And then, you know, okay, you see this and it's like, okay, well, I can now adjust to like something like this, taking into account these three. But then, you know, it breaks here. So I'm like, okay, well, I'm just gonna discount this because by the time the market comes all the way back to this, it's most likely, you know, it's just like a support zone. It hasn't touched it in forever. And the trend has clearly like changed and started to do something different. I'm not gonna expect it to come up here and like continue to respecting this downtrend. Like that just not how it works.
yeah,
Like they usually stay in, even though it's like you're doing a trend line, quite often the same thing, you can still basically do like a channel, you know, and it's like, okay, it's respecting like a channel and like you can match it on like the other side or somewhere, you know.
yeah.
And once it kind of breaks that, it's like, okay, well, it's probably just gonna not
It's
respect
not going
it.
to conform to that again anymore. Yeah.
Um,
Okay.
yeah, I mean, same
Yeah.
thing with like this right here was like this morning, we kind of had like a channel and then it broke that. And so I'm like, okay, well, I'm just going to delete these now because clearly this doesn't matter anymore. You know, like the market's just
Yeah.
skyrocketed from there. Same thing with like just on a 1 minute of like trying to, you know, adjust to like, okay, well, there's some kind of trend here or like, did we change and adjust to like something like this? I think a big thing that throws people off and threw me off in the beginning is it doesn't have to be like at a major swing or
Yeah.
like the
That's,
bottom of a swing. A lot of the times, a lot of the trends will do what I call is like a spike and then trend. And so like it'll have like a big move up and even it could be all the way up here. It doesn't matter. Like it just makes a huge move and then starts to go into something that's more constructive.
yeah, that was, I ran into this literally this morning of like, okay, do I draw it there or do I draw it off that
Mm-hmm.
bottom point where it's makes the high spike and then actually seems like it goes into a
Yeah.
mini channel?
Goes like in, yeah, I mean like on these two charts like this morning was, I mean there's not a good trend line that fits this, to be honest. Like it's just like a funky weird
Yeah.
like spike trend, and so it's like you don't have to fit something, and just because there isn't a trend line you can also just be like, okay, well, even though a trend line doesn't fit this, I can tell that you know, here it's like the trend is still in place because the trend right now is spikes, go sideways, spike, go sideways, spike, go sideways. A little bit of a pullback, but spike, go sideways. And so it's like you can still tell like the market is still doing the same thing. And that's all trends and trend lines are really telling you is the market continuously doing what it's been doing, and which makes it more likely to continue doing that, you know?
Yeah.
And then
Yeah.
once that breaks, then you're like, okay, well now it's over and I'll expect something to change.
Yeah. Is there a time frame that's good to draw trends over? I guess I found myself in a couple places drawing a bunch of like really small trend lines. That's like, oh, there's a mini trend there, or there's a mini trend there.
Like
And like,
this.
yeah, yeah, or like something almost like that. It's like, okay, yeah, you can draw something there, but is that even relevant at all to what we're trying to do?
Right. Yeah. Yeah. I mean, like you can just mark the shit out of your chart if you really want to.
Yeah.
I don't think you want to do that. I mean, even though it's like you're looking at, you know, you can look at a 5 minute chart and a 15 minute chart, and you can look at a 1 minute chart, and those are like zoom ins or zoom outs, like that I'll look at because you can definitely see bigger picture trends and stuff on those different charts. like with this stuff,
Yeah.
but same kind of thing with support and resistance levels. Like I only want to focus on the main ones that are like really clear.
Yeah, the ones that actually have
And
strength behind them.
yeah, and well, and even like here, it's like, okay, well, you can do, like you were saying, you can draw one like here and
Yeah.
here and here. It's like instead of doing that, like think about, okay, what is the more bigger picture? And that's that the like trying to find some. I mean, this isn't a good example, but like looking at the main swings and seeing, okay, this is clearly like the trend that it's in, and I don't need to draw little trend lines for each of these spikes of the trend, and then
Yeah.
trend lines for the pullbacks of these trends. Like you're just trying to, at the end of the day, all you're trying to do with all of this stuff is just help you figure out like what the main idea and main picture of what's going on is. And again, like with the philosophy of the big picture is important and all these little micro moves are really just a last minute thing to confirm where you're going to specifically enter in your order.
Yeah, but really it's what is the big picture?
Yeah.
Okay. Okay, that's a good thing for me to work on for next week. Oh, I guess for assessing health in the market, like what chart are you trying to do that on to some extent? Because a lot of the time, it's like if you look at the 15-minute chart, it'll just be steady blue upwards or steady blue downwards, or not blue, whatever your colors are.
But yeah, like
White.
steady up or down.
Yeah, steady up or steady down. But if you look at the 1 minute, it's got little consolidations all over the place. And like similar with 5 minutes, like, yeah, I guess it seems like it can look unhealthy on one chart, but be a little bit more healthy on a smaller time frame. And so is that like, are you assessing the health on a larger time scale or a more narrow time scale?
Yeah, I mean, I look on a 1 minute, but like generally it's easier to identify it on a 5 minute. Like, especially if you use like a fair value gap indicator that just gives you,
Yeah,
like the
like, yeah,
boxes
yeah.
just to like really like tell you, okay, here's where like the overextended moves are. But like on a 1 minute,
Mm.
like you're saying, like there is the like,
Yeah, there's all of that.
yeah. And so
I guess part of my question is like, does that then not invalidate what's happening on the 5 or 10 minute or
like
5 or 15 minute
the
chart?
little consolidations,
Yeah,
like on a
yeah. Or
small
are they
time
just they're
frame.
just small enough that they like don't really matter?
Yeah, I think it can be small enough to where it doesn't matter, especially if you're looking for more of like a 10-minute reversal or like an 11 o'clock reversal. Like on a
Yeah.
big, the 5 minute, like you can still tell that it's overextended. Like even like this, like looking at, the move we had today, like I would say looking at this on a big picture, 5 minute, like this is a pretty big move that if it fails, like it'll definitely come back down to here.
Yeah.
And even like on a 15 minute, like that's a big spike up that totally could reverse. Like, of course, like it could just be a bull flag and continue higher. But like the idea that there is,
Opportunity.
yeah, like going back to what we talked about, like there's not really that much between the only previous swing is this. And so from, if it would at least come back down to here, I would think, if it's going to give this back up. And so like there's a lot of
Mm-hmm.
opportunity here of potential, like I guess void in the market for like it to find support easily.
Yeah.
And so, yeah, like, even though there's this consolidation now, like it still can, like, even though it's like, oh, I like to see it fail right away, it can and will most likely still have times where it does, maybe it just needs overnight to happen and then tomorrow it will reverse,
Yeah.
stuff like that. Like you can always just zoom out to a 15-minute chart and it's like this move too. Like this move moved up and went sideways for a while and then was given all the way back up.
Okay. I think that's at least all the main questions I have, or at least has given me plenty to think about. So
Yeah, I mean, do you think it makes sense to like get you set up for trading stuff or just still focus on that? Maybe like you could put the fair value gap indicator on your chart and you can just be thinking about that stuff more and like thinking about the 5 steps.
I think
Because that was a lot and there's still like, just another week of looking at the
I
market
just
can be
need time
really
and grade.
helpful.
Like, yeah, just looking and not pushing it too much. I think putting the fair value gap would be super useful because that just gives me a better idea of like I got a little bit of idea of when unhealthy it is and stuff like that, but having something to just I don't know,
Yeah.
help confirm it. Because a lot of my notes on my chart are like, was this unhealthy? Is that unhealthy? This seems like it is.
Yeah,
I
and
think,
so I think for that, like you can put it like on the 5 minute, but then also you can also put it on like the 15 minute.
yeah,
Because the 15 minute is, I think the 15 minutes more clear of where the unhealthy moves are. Now, sometimes the 15 minute isn't enough for if you're catching like a 15 or 30 minute reversal in the morning, but big picture,
yeah,
you'll
for a
be able
quick
to
one.
see like, yeah, like this is, this is a great indicator that this is an unhealthy move that we did this morning. And maybe we just come up to this area and sell off tomorrow and retest this low or something even.
Yeah. How does that work for instance, if the market opens tomorrow morning, I guess obviously we have all the overnight trading or after hours trading. But if it just starts going down immediately, are you looking at stuff that's happened before market open? For it's like, oh yeah, there's a head and shoulder, or it's already tested this um, before market open and then starts going down. Are you jumping in on it, or are you like, didn't hit my reversal or didn't hit my pattern and entry during market open hours?
I would say I try and stick to waiting the first 15 minutes to see that, because a lot of times, like, I have done times where I'll just, yeah, for some, like, I think, oh, this is doing a double top, and, all the signals are there, and it looks like really good to sell off.
Yeah.
Um,
But
and
most of the time you're trying to give it a little bit to figure out
Yeah, and I,
what
I
the
would
fuck it wants to do.
rather see like it, spike up and attempt a new high and maybe fail in the first 15, 10, 30 minutes and then enter in on that, because that's like a great signal to go short. And personally, like it feels a lot more methodical and repeatable to do it that way versus like there have been times where I've caught like a crazy sell off, like the market opens, and it just like sells off right away. Um, but those always kind of felt a lot more of like trying to predict a little bit more aggressively
Yeah.
than
A lower
sticking
confidence interval.
to, yeah, my strategy and like what I feel very confident in.
Got it. Okay. Well, do you want to show me how to install the fair market value?
Yeah, I mean, all you do is it's in the NinjaTrader platform. So you just click this little, I don't know, it says indicators, but it
Yeah.
looks like a little chart almost. And
Oh,
then
and
you
then just
just,
search for it.
yeah, you just type fair in here and then you just double click it to add it to the chart.
What's
Um,
max FVG?
just how many that it will show. Like each one of these is the fair value gap. And so, like if you scroll back, it's only showing 40, I think on mine, and that might be the default. And so if you want more, you do more. So there's that. The basic settings work pretty good.
It looks like the base is
It might be 10, but
10.
yeah, I mean, like, I don't really have a number. The main thing is like, okay, I want to see the most recent swing that I'm looking to see fail. Like, I don't really, like looking at a 15-minute chart, like, I don't really need to see, even though this big one here still, like, technically is not filled yet.
Yeah.
I'm not really looking to use that anymore. Like, I'm really looking to just use this one.
It's another one of those things it's too far back
Yeah, and
for the
like
most
it's
part.
gonna eventually fill that, but like the main spike reversal move has happened from that one.
Yeah. For the time frame that you're looking to trade on, it's not very relevant anymore.
No, like if you were, yeah, like looking and you were down here and you're looking to trade over multiple days, like then that's something else, but that's not what I'm doing.
Yeah. Okay. Cool. I got it installed.
It sounds like at this point this week, just continue to focus on the trends and like reading them and
I am absolutely good
identifying,
with that.
yeah, like when you think it hits these zones, like
Yeah.
what makes sense that it does based on the big picture. Because
Okay.
again, like that's the biggest thing. And then next week we can get into like more the smaller candlestick patterns of like head and shoulders and like actually talk about entering in trades and get that all set up.
Okay.
Okie
I
doke.
think that's what I got. Thank you. This is unbelievably helpful.
That's all I got. I don't know what else to say.
I got nothing. All right. Bye. Love you.
Okay, bye. Love you. Now, if you're still new to a lot of this and want to learn how futures work and dive even deeper, check out this video right here. It is an extremely detailed tutorial that'll get you up to speed even more.